What's going on, guys? Welcome back to another video on the channel. Today I want to touch on the topic of trading gap fills. Over the last few weeks, we have seen a few stocks gap to the upside after their earnings reports, and when a stock leaves a gap on their daily chart, there is a tendency for that stock to come back and fill that gap. So in today's video, I want to share with you how to spot these gaps, what to look for, how to trade them, how to minimize your risk when taking this type of trade, and overall give you some examples of what's happening right now on Amazon, on Walmart, as well as on Disney. All three of these stocks have gapped up due to earnings, and it looks as though they are starting to come back to fill that gap. Walmart is one that has almost fully filled that gap, and I want to show you in today's video how this worked out, how you could have traded this, and how you can apply this to other stocks that are showing gaps on their daily chart. We're going to use technical analysis as well as the volume profile in this video, so it should be a nice educational video for you guys. I hope you enjoy it. Press that like button, subscribe to the channel. Let's go ahead and jump into it. Alright guys, so to start this video off, I want to go ahead and use Walmart as the first example because this is a stock that went ahead and filled the gap to the downside and created a very nice trading opportunity. So on your screen, you are looking at the daily chart on Walmart. Now what you'll see is that over the last few days, because of earnings, which was on the 15th of August, we created a gap on the daily chart. So if I zoom in on here, you will see that we went ahead and filled the gap that was created off earnings. Just in the past, you can see we gapped down here and we filled that gap to the upside. So these gaps just on Walmart alone, if we just look at the last few days on Walmart, last few weeks, you can see we gapped down. This is when Walmart guided down. It went ahead and filled that gap to the upside. This is where Walmart gapped up due to earnings, and we went ahead and filled that gap to the downside. So here is just a good example, a good idea of what these gap fills look like. And now I want to give you an idea of what I look for to start looking for that gap and start to potentially take trades off of it. So when I look at a gap fill, if I start to see a gap being formed on the daily chart, first of all, what does that mean? That means that the previous day close and the next day open have a large gap between the price. This is usually due to economic data. This is usually due to earnings reports. And in this case, it is due to an earnings report from Walmart. So the previous day, the high of the previous day is something I will usually chart out. So the previous day for me is the 15th of August. And the high of this level is 133.57. So if I put a line at 133.57, that is one of the lines I will typically put on. That is the high of the day before the gap was created. Now what I'll do next is I will put a line at the low of the first day after the gap was created. The low of this candle was around 138.19. So right there between 138.19, I will go ahead and put that to the exact level, 138.19 and 133.57. I can see that there has been a gap that has formed on this chart. Now, when I see that, what I'll typically look for is a break back below the previous low here and see if that breakdown starts to cause the gap down and starts to cause the gap fill on the daily chart. So what you'll see is if we go to the 15-minute and we get some more time on this chart, once Walmart went ahead and broke below that low, which was right here, once we broke below that low, this was the low we were talking about, 138.19. You can see we had a little bit of demand in this level. But once we went ahead and broke below that level, turned it into a rejection point, that is when the gap fill started to occur. And you can see Walmart came right back down to our 133.57 level. And that is just simply how you would look to play these gaps. So once again, what I will typically do here is I will put a line at the high of the day before the gap was created. So the high of this day was 133.57. And I will put a line at the low of the first trading day after the gap was created, which here was 8:16. The low of this day was 138.19. So I will watch those two levels and I will start to see, is the stock starting to trade within that gap? And if it does, let me see if I can go ahead and take a trade using that gap fill, using the fact that I believe the stock will fill that gap. Now, I want to reiterate that trading gap fills is not a 100% trading strategy by any means, and by no means is there any type of time limit as to when this gap should be filled. It could take days, it could take weeks, it could take years for these gaps to be filled, and sometimes that's just not viable for someone that's trading options. If you're trading a short-term expiration expiration option. It could take weeks or years for this to happen, and you're just going to have that contract expire before this even works out. So by no means is this something that I would only be looking for. It's something that I would be educated about to potentially look for, but not something that you should be solely trading, looking for gap fills all of the time. In this case, it worked out beautifully. Walmart definitely paid nicely on this gap fill. And I'm also going to go ahead and share with you guys a few more examples on Amazon and Disney in today's video that could be setting up over the next few weeks, maybe the next few months, that I want to make sure that you guys are aware of. And hopefully we'll see this work out. And then you can see how this worked out live on Amazon and Disney after watching this video. So guys, the next example I have for you here is on Amazon, and this is another stock that has created a gap on its daily chart due to an earnings report. So what you guys will see is we're going to do the exact same type of levels. We're going to go ahead and put a line at the high of the day before the gap was created. The high of this day was 122.84, which is right in this general area right here, 122.84. And then we're going to put a line at the low of the first trading day after the gap was created. The low of this candle was 132.41. So 132.41 to 122.87, that is around the area that the gap has been created. So right in this general area, here is your gap on the daily chart. And this is the area that I would target back to the downside if Amazon starts to get down below. Now, I will say, full disclaimer, I am in a position on Amazon looking for this gap fill, so we will see what happens on this potential play. If I go into the 15-minute chart, what I want to see happen for this gap fill to begin is I need to see a break below that 132.41. You guys can see right here, that is our level, 132.41 to 122.87, and right here is the gap that I am targeting. This is a straight up move due to earnings, and if we fall back within this level, back within this zone, I believe that at Amazon will start to get weak in this area, right? My target would be back towards that 122.87 to go ahead and fill the gap on the daily chart. So if we go back to the daily chart once again, you guys can see Amazon sort of on an island, a price action island up here below 132.41. My assumption is that you get weak and you start to look to the downside due to the gap up. Now, something that I want to show you here on the 15-minute chart, we're going to get a little bit more time, and we're going to pull in the volume profile. So here we're looking at Amazon, and I'm going to go ahead and go to the studies and go to volume profile. This is very useful to use to get an idea of where the volume is in that gap, in that area on a stock when we have a gap up. So what you guys can see here is that Amazon, once we get below this 132.41, you can see the void in price action as we start to move to the downside. This void in price action is telling you that there's not a lot of support below. So there's not a lot of volume in the trading area in this trading range. So theoretically, if Amazon starts to trade below these levels, you should see an acceleration of downside into the level that starts to increase again, which you can see the peak of this volume is around 122.87, which is where it was before the gap was created. So with this volume profile, we can get an idea of where those valleys and peaks of price action is and get an idea of where a stock could be weak if it starts to move to the downside. And in this case, you can clearly see it. If we go to the daily chart, you can also see it here. There's a very large valley in price action right here where that gap was sort of created. So definitely something that I would be watching on Amazon as well, looking for the gap fill, looking for the stock to come back down, fill that gap after gapping up off earnings, very similar to what Walmart did here after its earnings. The next one that I want to show you is another stock that is already starting to fill that gap, and that is Disney. So Disney, another stock that looks very similar, right? You can see Disney went ahead and gapped up off of earnings. The levels that I drew out, we'll do it once again. The high of this candle, which is 112.67, and the low of this candle, which is 117.33. So we're going to put our lines at those two levels, create our gap right here, right? That's our gap on the daily chart. And if we go to the 15-minute chart and we get an idea of what this looks like, we'll go out and get some more time. We'll get 20-day, 15-minute, and you will see that once Disney broke below our line, broke below our upside line, which is right in this general area, 117.31, after we broke that level, the downside continued pretty aggressively, and my target on a play like this would be back to this low around 112.67. So you can see Walmart, Amazon, Disney, all look very similar here. All have gap ups due to earnings, and when you have those gap ups, there is a low volume void in price action, which typically will come back down to the downside. Again, I want to say there is no set time limit as to when this happens. In this particular scenario, they are happening relatively quickly, which is creating opportunities to the downside to either play put options or to short the stock. But sometimes you can have a situation where a stock doesn't fill a gap for weeks, for months, for years. That's something that you have to be careful of when looking for these gap fills. So real quick, just want to show you the volume profile. Once again, this is on Disney, the one we just looked at. You can see we start to get that void in the price action in this zone area between 117 and around 112. You guys can see right here, you have that void in price action, and that is sort of symbolizing the fact that we gapped up. We didn't have much trading in this area, and we sort of just moved up off earnings. And if we come back into this void, there should be some nice downside. So hopefully, if you guys are in these plays, we hope to see the downside of this channel. We hope to see the gap get filled. Disney, I believe, has possibility down to this 112.67. If we go to Amazon, we can see the possibility to around the low of 122.87, the big void in price action there. And then if we go to Walmart on the 15-minute chart, you can see that this one has already completed it, void in price action, to the downside, and we're ready at that gap fill. So in my opinion, this trade is over, but Disney and Amazon are two that I definitely would be watching. So guys, I hope that this video makes a little bit of sense. I hope you understand the concept of those gap fills, looking to see those gaps on the daily chart, getting an idea of where there is a void in price action using the volume profile, and trying to take advantage of that type of downside play. This also works on both sides. If we gap down, there could be potential for us to fill the gap to the upside. Again, I want to say this is not a 100% trading strategy. Nothing is 100%. On top of that, you never know when the gap is going to fill. If you take a short expiration contract, your contracts could expire by the time that gap fills. So it is definitely tricky to play with shorter expiration. If it's something you want to see out, maybe you take longer dated expirations, or you can even buy the stock or short the shares so you don't have an expiration on your position. If you guys have any questions, make sure to put them down below on the gap fill, on the volume profile. I'll be more than happy to help. If you enjoyed today's video, press that like button, subscribe to the channel, and I hope to see you in the next one. Peace.